here, David. Everyone can hear me okay? Good? Wonderful. Thank you very much. So we're going to go ahead and get started. Don't know, DB, if there was anything that you were interested in saying this morning, but otherwise I'm going to go ahead and get started. I mean to catch you off guard. And look at that. Yes. Real quickly,
I just wanted to mention one thing. I apologize. I had a lot of emails this morning from people who couldn't figure out, I guess, where the test had been placed. That's my fault for not making this clear yesterday. I'm going to post a link. Everything that we do during this course is going to show up on your course homepage. So if you'll navigate to that link, you'll see that everything from the course glossary, bonus video content, all the daily recordings, and any assignments and tests are going to be posted there daily. So just so you know, moving forward, and you don't have to send an email every day asking where something is. 9 times out of 10, you're going to be able to navigate directly to it just by going to your client portal and going to the course homepage. That's all I need to say. Thanks, Mark, and I'll hop off the mic.
All right, thank you. And I will send DB this morning the homework for tonight, as well as templates for you to use in your homework and throughout tomorrow and Friday as well. Real quickly, before we do get started, because there were quite a few questions yesterday about it, this is the overnight session. This is the overnight profile right here. Make this as big as I can. And some of you yesterday were asking me, could you show me an unfinished auction on the profile? This is what an unfinished auction on the profile looks like. Can everybody see this bar right here at 1903.25? See how that's normally we're looking for this nice taper, and then at 1903.25 we got that little pop of volume. Can you see that? Okay, good. What this is saying is that this at least this area is likely at some point to be revisited. It doesn't need to be, but with this little volume pop right here, and then price moving back up because it hasn't been revisited since that volume pop. With this volume pop, what the volume profile is confirming and is likely, let me just go back to the print and confirm it as well. And this is, as we start looking at how to pull these things together, this is going to be a good example of how to pull these things together. And there's some of you who were interested in trading in the overnight and had questions about that. So there were a lot of things that kind of came together here. So right here, where this little volume nodule is at 1903.25, it just, even forget the print right now. You can see more volume at 1903.25 than is at 1903.50 and is at 75. We don't get that much volume until we get back up to about 425, 4.25, 450, right? If this was additional aggressive sellers that was creating all this volume, then price would be somewhere down here. What this is telling you, this little nodule, is that there was a lot of aggressive selling and that buyers held that selling. Buyers held right here. That is the only way that we could get this volume, this much volume in that short amount of time. So that's kind of the story behind it, that this little nodule tells you that, and then price movement tells you that buyers are holding. So this is a pretty important level, 1903.25. And when I said in the messaging that this doesn't look finished to the downside, this in the profile is what an unfinished auction looks like. Now, like everything else in trading and everything else in the market, does that guarantee us that price is going to come back to that point? No, it doesn't. However, In my experience, what this is saying is that this is likely to be revisited, though it's not a guarantee, especially in the pre-market. And this also starts to talk to, because if you look at when some of this started happening, 532 a little bit earlier, there was an effort here by some larger time frame participant that did not want to see price moving too far down beyond 1903.25. So that is kind of an odd time and an odd place. And if I go back to my other chart, this little simple chart that I talked to you about yesterday, just a 1 minute volume chart here, right at the same time, remember I told you these volume spikes, because it's a relatively small amount of time, a lot more volume, aggressive volume to the downside. It's the only way price is going down. And then look at this right here. This was what, 4,300 contracts in a minute at 6:34 a.m. Eastern, 5:34 Central, a.m. Central. That is well ahead of when we normally see the U.S. market start to step into the ES. That was a considerable amount of volume at that time. And this is what created, so everything is lining up, this is what created that little volume nodule. And what this is telling us is, again, there is no way this volume could exist if this was continued aggressive selling. Because all of this continued aggressive selling, and there's no way that this could exist if there wasn't aggressive selling, because buyers had to hold all of that selling and then start moving price back up. So this is what an unfinished auction looks like. But what this market is saying right now is that there is a significant interest down here at 1903, 1903.25. Does it mean that price won't go lower? No. But what I can tell right now as I start developing my story for the ES in terms of getting context is that I know that there is a significant participant down here that sees value higher than 1903.25, 1903. Again, what it doesn't mean is that price won't continue to go lower, but until that changes, there is a significant participant here that that believes that there's value higher. So at or sometime after the open, if price does test back down to this level, I'm going to be very, very interested in seeing what happens at the print right around this area. I also talked about the fact, and I briefly touched on this yesterday. I don't expect anybody to remember this. I briefly talked about it. Right now, the VPOC of the overnight is at 1906. There is a long-term low volume area at 1906.75. And one of the things I said yesterday, it's kind of a general rule of thumb, and I gave this specific example. When the overnight VPOC is sitting around near a long-term significant low volume area, the probability at the open is for a very volatile, choppy open. So what this scenario with the buyers stepping in here and with this VPOC 3 ticks away from a long-term low volume area tells me that the open today is likely to be volatile. So it tells me that at the open, my best course of action is to sit on my hands and watch how this auction develops. Now in the overnight, as price came through this level 1909, it created a low volume area. And you can see from a price standpoint, for those of you who are interested in trading the pre-market, you can see how this continues to work. So remember that the low volume areas are unfair highs and lows, right? So price is coming down. Remember all of this, this price distribution, you can see this nice bell-shaped curve. Get to my drawing tool, I keep forgetting I have that. We have this nice bell-shaped curve, but that wasn't there prior to price coming down. When it broke through this level, it started building out more volume. So as price breaks through a low volume area, and trust me, we're going to go through this again. As price breaks through a low volume area, if this was going to be just a stop run and price was going to pop back up, what we would have seen is a low volume area, some additional volume, and then a quick taper. And then price would have popped right back up. And that would have told us we would have seen zero or very weak print at the bid down here. We would have seen strength at the bid right into some significant weakness. It would be a stark, in fact, here it is. Right there. Pretty significant strength at the bid, right into some stark weakness at the bid. A pretty good example of a stop run or the other side stepping in pretty harshly to move things around. So I wanted to show you this unfinished auction. Again, I want to be real clear. It doesn't mean that price is absolutely going to come down here. Remember, what we're in the process of is transitioning from our overnight market into the RTH session. There is a significant difference in volume between the two sessions. And so what I really start to care about is this starts to provide an area of interest for me. And if price tests back down here in the morning, I'm still sitting on my hands. I want to watch and see what happens with buyers and sellers. I also want to watch and see what happens with buyers and sellers right at this level here at 675, because that's a long-term low volume area. So we have a lot going on here this morning. Our overnight volume profile shows the VPOC of the overnight, the volume point of control, the most fair price in the overnight here at 1906. I can see evidence of a pretty strong buying holding back this continued move to the downside. And then another low volume area here at 1907.25, which is still very close to my long-term low volume area at 1906.75. So all of this tells me that the high probability at our open today is for a volatile open, meaning price likely will move dramatically up and down. And it's not something that I want to trade in. So it's kind of an early warning sign for me. And even if the market opens and it just shoots up or shoots down and is very specific in the direction it wants to go, and let's say it gets up to this 1909 and moves down 5 points, I don't care. I really don't care. I've experienced this enough to say that this combination, when this happens, that I want to stay out of the market. I want to stay away, because what I typically experience more often than not is a sharp move down followed by significant responsive buying, followed by responsive selling, and you get this whippiness, this volatile open. So I wanted to go through that because honestly, in the next 2 days, I don't know that I would have another opportunity to share this as a live example with you. So I wanted you to see it this morning. How is that endemic of a stop run in particular? Just real quickly, in terms of stop runs, there are two things that I look for. I'm looking for, first of all, a low volume area, a key level, and that could be just a simple rotation. Let's just say I'm looking to go long. at, just using this as an example, at 04 and a quarter. And I go long at 04 and a quarter because it's a key level. When I see this in the print, strength at the bid, a lot of strength at the bid into pretty stark weakness, and then price pops right back above my key level, that is very much indicative of a stop run. And they took out the stops below and popped it right back up. So in those cases, I get in, I get stopped out. Whenever I see that pattern, and in the profile, there's a very quick little volume area with a taper. You know, let's say this just goes down quickly like this, and it pops right back above that key level. That is a stop run, and I would get in long again. Again, not everything is absolute. Nothing is in trading, but those are that is the print evidence to me of a stop run, and the evidence in the volume profile. Yep, you're welcome. All right. So anyway, again, I could not even imagine having another opportunity to share that with you. So I'm really glad that that came up. And we'll take a look. I want to mark the opening swing for you this morning. So when the open occurs, we are going to jump over to this chart, and we're going to mark the open, and we're going to mark the opening swing. I'm going to show you how I do that. Well, hopefully after I show you the opening swing today, it will help. Now that's going to be in 12 minutes, so I'm going to get into some of the content here, and I'm going to watch the clock, but you can also remind me when it's coming up. All right, a couple of things I want to go through, just a review of yesterday in about 10 minutes here. There are 4 volume tools that I use in this course, and I primarily use to trade with: the volume profile and the print. There's a composite volume profile, and composite just means multiple time frame, several days, weeks, months, etc. A short-term volume profile, usually I'm talking about a day, but that can be a 5-day. And again, as some people might call it a micro composite. Micro composite just means we're putting days together, but it's a small number of days. But a short-term volume profile, usually intraday, but it can also mean, and I'd be very specific about it, you know, if I'm using a 4-day profile, I would tell you that, but I would tell you why I'm using a 4-day profile. Volume over time, you can see I use the 1-minute chart, the 2500 volume chart, as opening and closing swings. And again, that's only for the ES. And then the 4th volume tool, and without question, the most critical relative to the moment of truth, which is my trade, is order flow and the structure chart, along with volume cluster and momentum analysis. There are 7 elements of every volume profile. It absolutely doesn't matter where you draw the volume profile, what instrument you draw the volume profile on. It just doesn't matter. All of these 7 elements will be a part of that volume profile, which is volume bars at price, price distribution curve, high volume and low volume areas, volume point of control, value area, and the finish on either or both sides of the top and bottom of the auction for any specific point in time. And when you come to understand these elements, you will automatically start looking for these things. For example, when I look at a volume profile, the first three things that just absolutely jump out at me, and I immediately either mark on the screen or make a mental note of, is VPOC, low volume areas, high volume areas, and then that price distribution curve, or really the structure of the volume profile. And then I'll look at value, and I'll look how the profile is finishing on each end. But those three things, high volume, low volume, volume point of control, in any volume profile. In fact, I could be looking to trade options on a stock, and I'll look at a 3-year, 1-year, 6-month, and 1-month chart. And what I'm looking for is to start lining up high volume, low volume areas. And it really kind of depends upon if I'm looking at a weekly option or a monthly option, what my time frame, my minimum time frame is going to be. But I'll do the same thing every single time. So those are the 7 elements. We've got 7 minutes. I'm watching the clock. Volume bars at price, just a couple of things about those. Every transaction at each price is recorded and represented as a single volume line. Pretty simple. The more transactions, the more prints at a price, the longer the line. The fewer the transaction, the shorter the line. Now remember, what this is doing is taking all of the transactions at price. It doesn't matter if it's at the bid or the offer. And what it's saying is participants are most willing to enter. And this kind of goes, this is very consistent with OFA when you think about what volume cluster analysis is, and you're looking at where does price, or where do participants, not price, where do participants enter the market? Because that's saying something about their conviction level. Where do they enter the market? And what the volume bars at price is doing is saying, here's the level of interest at this price, this price, this price, where people are entering, and I guess it could be closing positions, but if somebody's closing, somebody's opening, here's where they want to do business at these different levels. So the fewer the transactions, what that's showing you from participants is that buyers and sellers don't really want to execute trade at those areas. The more transactions, it's telling you this is where buyers and sellers feel comfortable, more comfortable, because they believe they can make profit, and profit is why people trade. They feel more comfortable in getting in at those prices. So pretty simple. All right, price distribution curve. This gets into the structure of the volume profile. It's not often you're going to see a perfect bell-shaped curve. You've got to draw that out. What you're looking for is a VPOC somewhere, of course, within value. VPOC, you're looking for some level of taper to each end, but in a volume profile, you are looking for the ability to make some form of bell-shaped curve. This is a normal distribution, and this occurs when you think about what's happening behind the scenes in the auction. This occurs through the normal acquisition and distribution, or the letting go of inventory. So if I'm a buyer, I become a seller. If I'm a seller, I become a buyer. And as I buy and sell and I take profit towards the edges or further away from fair price, more participants or fewer participants are willing to trade. So the further the market gets away from fair price, the less participants are willing to trade. And that's how we get this curve. And I'm telling you, it just it happens for not every, but most distributions. And when it doesn't happen, like we talked about yesterday, we got about 4 minutes here. It tells you when you don't see the distribution building, it tells you there is weak structure in that area. Likely going to be a trend. You're likely going to see momentum dots. on your print, on your order flow chart, you're going to see momentum dots pushing either up or down through that area. And what you need to understand is that when price comes back to that area, it's likely to fill that area out and spend some time there. Again, high volume areas are considered fair prices. Low volume areas are considered unfair prices. All right, 3 minutes. High volume areas usually generates rotation. It's important to know when price comes to a high volume area, and just look at what we have this morning. Here's our VPOC, which is high volume area. What are we getting? Rotation, down, up, down. We're getting rotation around VPOC. And that's because this market is, in the pre-market, we had the buyers step in. We also had sellers step in. So it is beginning to settle, except right around this price. And once again, because it's sitting on a fairly significant longer-term low volume area, or it's relatively close, all of this again is suggesting a fairly volatile open. Okay, act as a price magnet inside price distribution curve. So when you have a fairly orderly, and this will come into play in August on the ES, when you have a fairly orderly distribution, your volume profile gives you a really nice bell-shaped curve. And the ES is trading within 5 points. You want to look at taking shorts from the top and longs from the bottom. In fact, sometimes in August, especially the last couple of weeks of August, those are the best trades. They're difficult to trade sometimes because they're a small range, but you need to understand that when you get a really nice distribution, you got a bell-shaped curve, you're getting weakness at the offer at the top, weakness at the bid at the bottom. Your best trades, when the profile is that perfect, is going to be short at the top and long at the bottom of that range. All right, we are. All right, we're just a couple of minutes away here. I'm gonna come back to this. Can everybody see this chart okay? So this is what I do, and you can do whatever you like. Whatever colors make sense to you is something that you should do. So one of the things that I do prior to the open is I get my lines set. So all I have to do is pretty much put them into place. If there's a key level, like 1909 is a overnight low volume area, I mark that. And 0675 is a longer-term low volume area. And we're going to get an open here. We have our open. The open is at 1905.50. So I'm going to pull this down to 1905.50. And what I'm going to start watching for is the initial swings. So I have a potential opening swing high here at 1906.50. I really want to see this pull back down through the open for me to mark that. Now, if I didn't have VPOC sitting 3 ticks under this level, this might be a possible short or long for me. All right, so that is my opening swing high at 1907.75. So first push, we've kind of moved back down below that this bar. So that's the opening swing high at 1907.75. Right now, we've gone 1 tick. The downside has gone 1 tick beyond the open, below the open. So this is where somebody asked me yesterday, could it be that the one side or the other, opening swing or closing swing, would never be more than the open? And this is an example. So if we see the price push back above the opening swing, because opening swing low would never be right here. Opening swing low could never be above the open. It can be at the open or below it, but never above it. So as I look at the context, and all I'm doing is looking at this, not even the print. As I look at the context, this starts giving me some information. Now, when I look at the print, however, let's do this. I took an oil trade this morning, which is where this came from. When I look at the print, and I see price moving higher, still looks like it needs to go a little bit. What I see is the sellers right now have stepped away. They literally just said, okay, we're done. And they've stopped participating. So from an opening swing standpoint, because it can be a little subjective. Right now, according to at least price movement, buyers. I don't want to say buyers are in control. I don't like that because for me that just gives me a certain sense of bias. The way I put it for myself is right now buyers are being more aggressive than sellers, or the activity at the offer is more aggressive than the activity at the bid. And from a profile standpoint, find that profile. I have a session that that just marks the. Here it is. Looking for the profile. Right now this is not, I gotta fix this. It's not drawing the profile for me on my RTH chart. So anyway, this becomes the open swing. I want to get back to the information. This becomes the open swing. If I were looking at the print, this would be a potential level. It helps if I actually go to the end. And this is, we're going to do this again on Thursday and Friday, but here's the level I'm looking at a potential, sorry. Sorry about that. Looking for a potential short where I'd be looking for sellers to step in. I'm going to grab a drink of water. I'll be right there. Sorry about that. I'd be looking for potential sellers to start stepping back in. And while we've got weakness at the offer up here at this level, remember this is the overnight low volume area. Still seeing some strength at the bid here. A little bit at the offer at 1734. I'm starting to see some strength come back into the bid. So this would be a scenario where if this trade would be higher risk right now and for a short because of the additional strength at the offer here. And this is what I mean by potential volatility here. See if this pops back down. Anyway, that is the opening swing, and there are times the first pass through opening swing high, we may see it move all the way down to opening swing low, and even pass through opening swing low, and then pop back up. But a high percentage of the time, the second time price comes up through opening swing high, or the second times it moves down through opening swing low, that level, that opening swing high level, becomes a very good level to trade against in this continuation, this direction. So this would be long. Second time it came up, you look for a retest and then go long. First, for sure, the second time down below opening swing low. This is typically how I trade. Price will come down a second time, come back up to opening swing low. I would go short here, especially if the print warranted it, and I would put my stop behind the open. So 2-tick stop, potential for much lower price. So that's how we mark the opening swing. I will keep this opening swing low now, 1905.25. The sellers have tried twice. This is a push, this is a push, and they are nowhere to be seen. And so I am leaving my opening swing low at 1905.25. I do not use a geometric. Question is, do I use a geometric pattern to confirm in any way the setups? I do not. Yep, I do not. And yes, this is an open drive. An open drive, we talked a little bit about that the first day. Open drive is an open type. And right now it is an open drive, and that's pretty much marked by the activity. The open type is marked by the activity from the open. So if we had trade to the upside of the open, trade to the downside of the open, that's called an open auction. Whenever there is trading on both sides of the auction, meaning price is moving up above it, down below it, that's called an open auction. It typically means that there's neutrality, not conviction in one side or the other. There's relative neutrality, and you want to wait for the auction to move. You see prices just move back down to our opening swing high with a little bit of a bounce. And again, the way you would do this is there's the print. We're getting weakness right at that level. Buying coming back, you'd be long, right? Long, got the setup, and now you're looking for, I'd be looking for at least 0975. If I started getting any significant strength back to the bid at 08 or 0775, I would likely just move out of the trade. Again, I still have a sense this morning that there'll be some volatility. So I am, even though we have an open drive, this could just set up to be an open test drive, and I typically want to wait to see what this market is going to settle on. All right, my volume profile. This is another chart. This will be made available today, this template. All of these profiles that I have, I use only the RTH session. So we can see in this session right now, VPOC is at 1909. VPOC right now is, if you remember, the low volume area from this morning. was at 1909 exactly. We are above yesterday's low. And when we start considering yesterday's, let me bring it up. We start considering yesterday's profile. Bring this over. You see this distribution, this lower distribution from yesterday? This is yesterday's, this is the overnight. Just do this. This is the overnight profile. You can see the low volume area right here. And then we're starting a new profile. And you can see right now VPOC is sitting right on top of this low volume area, filling in relatively nicely. And this is another instance where the profile does not look finished to the upside. I will tell you that 1250 is the closing swing low. 1250 right here is the closing swing low from last night. It's also a little bit of a low volume area in the overnight. We're getting an initial bounce, but you can see volume growing right here. This is not finished to the upside. I would expect, and when I look at the print, everything in this says that there's more room to the upside. Everything in this says that there's more room to the upside. Now, it may be one tick, it may be 10 points, but everything is saying that the upside is not finished. So this chart gives me the RTH session only profiles. And I will have that template made available today. So in the RTH session, I can see a low volume area established here. I can see one established right here at 1075. So if I were looking for a long, right, I was looking maybe to scalp this morning and looking for a long, this low volume area here, I would be looking for the print specifically to get weak at the bid and strength at the offer. And I would look for a long right off of this area, 1075. And when we look over at the print, there's 1075. We have weakness at the bid, strength at the offer. There's the long. And now I'm looking for, if I'm looking for a target above, I'm going to start looking. Here's yesterday's low right here. Low of day, 1907.50. This profile is nowhere near finished to the upside. I'm going to start looking for what? Start looking initially for VPOC from yesterday, which was the most fair price. So my first target on that trade at 1910.50 there, 1910.75, is going to be right in front of VPOC. So I'm going to look for an exit of 1450. Now, if for any reason something happens and price starts coming back through 1910.75, I can simply get out of the trade. But I'm looking for price to come and test yesterday's VPOC now. And again, the reason is because yesterday, this is the most fair price. Question about my settings on OFA on the ES 12.4 and 12.6. 12.6 on the previous chart, just simply because it takes up less bars, and I'm so yes, on the 12.6 chart, I care about the volume profile, so I care about getting a lot of bars in. And I'm sorry, fewer bars, so I'll have fewer bars with the 12.6 chart. The 12.4, 12.4, same thing. It gives me pretty good sense of the volume profile. So when I care about volume profile, I have a bid sorry, not bid, probe and rotation setting that typically is higher. My probe is going to be higher. When I care about my print and what I use to execute at a moment of truth or a point I'm interested in trading, I use a 6-4 chart because this gives me a really good feel for the road, so to speak. So what's happened here is it doesn't look finished to the upside, but this looks like it may be cooling off a little bit. And if I were in this trade back down here at say 11, what I would be looking for, because of this, we'll get into this Thursday and Friday. This lot of strength at the offer up here. I don't think buyers are done up there, but this combination 81, 569, and a couple of ticks below this high tells me that we're likely to start to get some rotation lower. So I'd have to start making some decisions about this trade, and what this print would likely cause me to do is start taking some profit. So remember what I said is objectivity is so crucial to the psychology and staying consistent in trading. So what happened here is I got the trade that I wanted, right here, went long, and prior to right here, and prior to my target, yesterday's VPOC, it was still showing strength. The profile was showing unfinished. Everything was looking good. And then I get this bar on the 6-4 that says, wait a minute, we may have some issues. It's not to say that this target is still not valid, but what the print is saying is something is changing a little bit. We're getting a little bit more seller aggression. I still have this as my target up here, but this starts adding some risk because it could come all the way back down to this low volume area, and I have to make a decision as to whether or not I want to hold for profit or I want to take a little bit off, because I can always get back in. If the print comes back down and shows weakness again at the bid, I can always get back in or add more contracts. All right, so there we go. So I use my 6-4 chart, my moment of truth chart, and to actually manage my trade is right there. So I was looking for a tag of yesterday's VPOC because it's the most fair price, and that's where I expect price to go, and at least test, and look what we got. Right up to 15. Now, if you look at the overnight session, you can see a high up here of 18.25. And if you look at yesterday's activity, we've got this low volume area between, say, 1750 up through 1920. One of two things are going to happen in this area. We're either going to get a little bit of a battle in here, and if we start getting a battle and start getting another distribution higher, that's not always a bad thing because we're getting acceptance higher. If we start getting price with momentum dots into this distribution from yesterday, this is kind of what's called a double distribution day. If we start getting price beyond 21, then we're into this distribution. And if today's profile leaves a low volume area somewhere right in here between 17, 18, 18.25, I would look for a long off of that low volume area, and actually all the way up to 20, and look for price if it starts breaking 21, 25 to actually start clearing this whole area. Does that make sense? My stop for that trade that was at this low volume area, 1075, my stop would have been likely to no more than 3 ticks on that trade. Because if it breaks through there, I want to give it some room, but at the same time, there's still potential for it to come back down and test to the downside. Double distribution yesterday, and I want to get into our content here, but the way I played double distributions the next day, so if price starts getting well into, especially above 1909, this is where I would look to get long, and I would look for, this is my first target, which we hit, and this is my second target, and I would start looking for activity that would show sellers. Doesn't mean there would be, but I'd start looking for activity that shows buyers starting to weaken and sellers starting to pick up in this area. And so I would start looking even potentially, I don't want to be short necessarily. I want to hang on to my trade until today's activity tells me I need to let it go. I need to take profit. And then and only then, what I would look for is either today's information, today's profile and print, to tell me that this is the distribution that today's market is most interested in, or I would look for price to break up through 1921 and look for a long on the other side of 1921 as long as I don't have evidence of a stop run. And then I would look to play that long up through this distribution and up through to yesterday's high. That's how I would play, per se, a double distribution day. I think I have a setting on my volume profile. I just got to quickly check. Okay. Okay. All right, we're getting a little bit of a pullback here. VPOC is now sitting at 1225. Again, my first target is right in front of this VPOC from yesterday. So just real quickly, and then I'm going to get back to the content. Look at yesterday's VPOC at 15. And right now, what is the market telling you about this being fair price? Now, this may turn out to be fair price, and we very well may see price come up all the way through this low volume area and test higher. But right now, what buyers are saying is we're either taking profit or we don't have a lot of interest on the other side of this volume point of control. And it's one of the reasons I look to scale a couple of ticks in front of it. Because a lot of times, and I talked about this, and I don't have a percentage of time. It really depends upon what the market's trying to do. The reason I scale out in front of the previous day's VPOC is because in the shorter term, we've had a trend to the downside, and tagging yesterday's VPOC is an area that would make sense to me for the market to start turning around and moving lower. It tested it. It completed the test. Right now, relative to that test, it's saying not the same sentiment as yesterday. Does that mean that it won't? No, it doesn't mean that. But what it's saying is right now I don't have the same sentiment. All right, so we're going to come back to that. I will tell you that this still looks, you don't see a really good taper here, but we do have a low volume area now at 1475, a lower volume area here at 1475. And the print is now showing, the print is not only just showing weakness at the offer, but look at the activity back at the bid. So I couldn't engage long again until I started seeing buyers holding the bid and actually starting to come back with strength. So, but that trade at 1075.11 this morning worked for VPOC for what, 4 points, which is a good start to the day. What's the logic for thinking long out of the 19 volume area? And again, that's yesterday's distribution And I'll get back into that. There are going to be a lot of questions around trading. How to get yesterday's volume profile. Yeah, so I'm going to give to DB, and he'll put them out there today, my templates. So I'll have 3 primary templates that I'll provide for you. And to get yesterday's profile, all I did was simply start this profile at the beginning of the day, and I ended it at the end of the day. So I pulled it to the end of the day, and it gave me yesterday's profile. And just to be clear about something, I'm really not interested in going long until price would get above 21. I would need to see the auction starting to support acceptance higher than this. I would look for around a 20.50 for long. And then I would look for price to get back up into this distribution. So if let's just say price gets up here again, if sellers aren't willing to take this back down, and let's say they try, buyers hold them, and it starts moving back around above this 21 level, then again, it's all about probabilities. The probability here is that price is going to start moving up through yesterday's distribution, and we'll see another distribution today that is above 21, 22, and give reason for price to go higher. However, still have this area right here. The auction doesn't look finished to the upside, but the print is saying that buyers have checked out, and I couldn't go long again until I saw them re-engage and effectively start to move price again. All right, so I want to make sure I get through the content. Yesterday I was an hour into it before I realized I was an hour into it. So I'll try to get back to some of those questions, and we're going to have a lot more time over the next 2 days. And last question I'll answer is, wouldn't the sellers of yesterday defend the single they made at 1975? That could be. However, this will be my last thing. Remember my context this morning. And this is why I go through pre-market sessions. Remember my context this morning that some significant, likely other time frame participant said, we're not moving lower. I saw it in the volume. It was very early, a lot of volume for that time. This was clearly another time frame participant that said, I have interest. This is, I believe value is higher. If price is gonna go lower, you're gonna have to come through me. And then it spent the rest of the pre-market with this test lower right down to this low volume area here. And then we saw buying again. And then we had the open drive, which was buying right off the open. Everything right now from this point right here, that's why I pointed it out this morning. I said it doesn't mean that price absolutely will come down, back down here. In fact, this is some pretty strong buying. But everything about this pre-market, number one, suggested volatility because of where I had VPOC, and now from the open on is suggesting that sellers are, let's put it this way, sellers this morning are contributing to the accounts of the buyers. How's that? So won't sellers defend this area at 19 or right here? That's possible, and it's something. 17, real quickly, 17 is also a long-term low volume area right here. So it's very possible that that sellers will defend it, that they'll step in, however you want to say it. And we're seeing a little bit of that right now. But for me now, because of the way this worked, I would need to see price, and we came back down here to 1125. I would need to see price really break through 1075 and back down through the open for me to for me to start thinking short. Everything of this market from the open on, the context is that the pretty much the buyers are eating the seller's lunch. So I need that context to change, and once it changes for me, then I would start thinking about a potential short. And might I miss a trade up here around 17, 18, 19, right where this low volume area starts? Absolutely, I might miss that. But for me, remember I said that I give the most context, the most weight to the current day's activity. For me to trade against today's buyers right now, even though I've got a low volume area here, even if price comes up, we get a nice finish, I could do it. Get a nice finish, we get weakness at the offer, strength at the bid. I could take a trade, but I'll tell you what, my stop's going to be really, really tight. So it would be against everything that I'm reading in the market right now. So sellers definitely could come in and defend this area right in front of this this low volume area. In fact, it'd be something that I would watch for. But what I would need to see repeatedly is I would need to see a push down by sellers in the print, another effort by buyers. I would need to see the buyers held and then push down back below this 1075, which buyers have, for lack of a better term, defended or stepped in there twice now. Yep. And we did see a long bias print. Actually, not yet. In fact, this is where for me I would start sitting on my hands. I'm looking at this print right here. Looking at this print, I'm looking at the move higher here, and even though price is going up and I can see weakness at the offer on this side, the actual numbers right here just don't excite me about a long. Now it worked, but I didn't have anything in the print here that suggested that this was going to go higher. We had neutral cluster here, activity back at the bid. Price still went higher, but it went higher because sellers really didn't engage. So I'm looking back up here for sellers to potentially engage and buyers to prove to me that they really have the continued momentum. So I'm not real excited about I'm not real excited yet about still going long, even though that's a sentiment for the morning. I didn't like the way that this auctioned. And again, what I've trained myself to do is look at things like this and respond to it. Does it mean I miss trades? Yep, certainly does. But I can tell you more times than not, when I see something that, and I objectively respond to it to say, man, this really just doesn't look that strong from a buying standpoint, it could mean that I missed the trade. But more times than not, I find that I've protected my downside. And I also know this is not the last trade of the day. And this level worked. I didn't really have a signal to get in. I would be looking for something like this. And even if I use that to get in, with this additional strength at the bid, I might have taken my stop at break even or a smaller stop. Again, I'm just using the print to manage my trade and trade objectively. I have never gone home red by managing my risk effectively. All right, let's finish up a review of day 2. So we're going to do this again tomorrow and Friday. If we get to a presentation at all tomorrow and Friday, except for a little bit of context, I would be surprised. We're going to spend most of the time in the charts. So real quickly here, to continue this, low volume areas, and I'll get back to questions in a bit. I want to get through the content. Low volume areas are prices where buyers and sellers have not shown to want to initiate trade. You saw it today. We had the profile show us a low volume area. As price came through it, it came back, retested it, and sellers failed, buyers picked up, and it was a good opportunity for long. Those are trades on Friday. When I'm trading, you're going to see me take. considered to be either an unfair high or low, depending on market sentiment. Real quickly, the other thing I want to tell you is my trading method, especially once I'm in a trade and how I manage a trade, has been I've developed over many years and thousands and thousands and thousands and thousands of hours. But it's right for me. It's right for me. And what you see and what you do needs to be right for you. So I want to caveat over the next 2 days as you see me do more trades. And I'm going to tell you why I'm getting in. I'm going to tell you why I'm getting out or managing a trade, scaling out of a trade. I'm going to specifically tell you why. But I'm going to put that all in the context of an objective, a financial objective for the day. And that will make more sense to you. And my goal is to show you that, again, when you have that financial objective to the upside, profit, and what your risk tolerance is, it will help you. As long as you keep it out in front of you, it'll help you stay objective. All right, low volume areas considered to be either unfair highs or lows, depending upon market sentiment. So this example from this morning, we had an open drive, significant amount of success by buyers to move price higher. And that made, once we had that low volume area developed at 75, it made that an unfair low. When price came back down to it and we got the print the way we wanted it, it was a trade long. So they're either an unfair high or low. Price is going to either slingshot through it or act as a brick wall. This morning as price came back to that low volume area, it acted as a brick wall. And it can provide excellent risk-reward trade opportunities, as you saw this morning. I had a potential, my stop would have been about 3 ticks, and that trade was, if I would have closed the trade at yesterday's VPOC, that would have been a 4-point trade. So the risk to reward against low volume areas is pretty phenomenal. I'll get to questions here in a few minutes once I get through this review. Volume point of control. It's the highest volume price point in any specific volume profile. So today's volume point of control is likely going to be different than yesterday's volume point of control. Today's volume point of control right now is significantly different than the overnight volume point of control. And real quickly, we talked about this before as well, but I want to show you the example. Remember when I talked about where VPOC is relative to the value area? And I said if VPOC is low against the value area, the likelihood is that price is going to go back up. If VPOC or could have acceptance lower, this would give more credence, weight to a breakout below this level, having the VPOC low. If VPOC is high in the value area, I'm looking for evidence in the print that would suggest that price is coming back down, especially if there was a good finish to one side. If the print or if the VPOC is the middle, we have a nice distribution around it, then I'm looking for an open auction, or I'm looking for price to rotate around that VPOC until one side or the other gets aggressive and starts probing higher or lower prices. So this was another example. This also led to some evidence that buyers were holding, and price may go up. So I just wanted to point that out. So where VPOC is in the value area will give you some level of understanding based on the print. Is the market going to continue, or is this a potential area for price to turn around? Again, VPOC will often act as a price magnet after price gets rejected at higher and lower test areas. The finish. It's the tapered edges of the volume profile that reflects the end of a directional move. Very easy to see at the end of the day. And in a developing volume profile, can look finished to one side in a specific direction several times throughout the day. This is particularly true with a trend day, where you're getting consistent, constant new distributions, higher or lower, and as it comes up or comes down it looks finished to one side, and all it's doing is rotating back up through that last distribution to the next higher, low volume area where you're looking to take a continuation trade on that trend. So they can look finished, and then once trade starts moving back down in a finished area, it opens up that auction, and we'll see price move or continue in that direction. There's a high probability that unfinished auctions will be revisited, and the auction will continue in that direction. So this morning, when buyers started to relent and sellers started, I don't want to say sellers started stepping in, what we saw was activity at the bid. And when you see activity at the bid, especially after an open drive, you can't just say, well, sellers are stepping in here. Sellers are stepping in, because all of that buying is going to turn into selling at some point as they take profit. So you would expect to see a good amount of selling at some point after a fair amount of buying. The thing you want to look for is, as price is coming down, if it's showing a significant amount of what would be considered selling in the print, is the buying weak? Is the buying just incredibly weak until it gets to a logical point where the activity at the offer starts picking up again? If that's the case, then what you're most likely looking at is a liquidation of inventory and not buyers stepping back into the market, and you can begin to expect to see price moving higher. Baffled by my momentum settings. My momentum settings are actually just the standard momentum. They're the 3 or 4 rows, depending upon the depending upon the probe and rotation. I typically will use a just a standard momentum setting, with the 3 the 3 rows. Sometimes I'll customize it, but typically use just the standard momentum setting. See if I can show you that here. Yeah, just the 3 rows. This is pretty standard. I'm looking for strong, 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 buying momentum, selling momentum, strong, 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 negative to weak. That's my setting on the momentum map. So we are at a intersection here. I would call this an intersection of information and knowledge. And this is where we are in the overall process, not just where we are in the course, but I consider learning a process. And in the process of learning, typically what happens is you get information. Even if you're experiencing something or you're watching something, you are part of the process and your information is very tangible. You are, in fact, getting information. So as we learn, we first get information, and then we look to move that into knowledge through practical application. So that's where we are after 2 days, and there's a strong likelihood that some people believe that they are drinking from a fire hose in terms of that information, and I totally get that. You've received a significant amount of information in the last 2 days. Even this morning, I've taken a bunch of that information and crammed it into an actual moving auction. And if you were what you're trying to do in your mind is you're trying to recall everything that I've talked about, and a few things are catching where you're going, oh yeah, okay, yeah, I understand why we came up and tagged VPOC and why that would be your target. Okay, I understand why you might be looking for sellers to step in here. I understand we got a low volume area that was developed, so you'd look for a long off of that level, yeah, I get that. Okay, I get those things fundamentally. I understand it. But there are probably a lot of other things that I was doing relative to the print where it was still a little foggy, a little hazy, and it's because you have a lot of information, significant amount of information. And I want to make sure you understand that has been and will continue to be my role and responsibility. As a trainer, I provide information. However, teaching is not learning. Just simply because I teach doesn't mean that you learn. And learning becomes a very personal thing, and people learn differently. Every single one of you is picking up things and being able to apply things differently, and I completely understand that. And it's incredibly important for us to understand where we are in this learning process, this teaching and learning process, because where we are going from here is transforming information into applicable knowledge. It is, now understand this word, our objective over the next 3 days. So the first 2 days has been my responsibility to provide you with information. And that is going to continue to be my responsibility to provide you with information, clarify your questions, and make sure that you have everything you need to transform information into knowledge. But where we are and where we are going is kind of a joint venture here in learning. And it now becomes our responsibility to take this information and transfer that into learning. I want to be really clear about that. So I'll keep doing my job, my part. I will clarify. If I don't see a question and it scrolls off the chart and I don't get back to you, it's not because I don't want to answer your question. It's because I don't see it. Feel free to ask that question again in the text. I don't care if you have to ask it 5 times. In fact, you can say second attempt or something like that, third attempt, and I'll know that I'm just really blowing it and I need to get back to you. So this is where we are going, is together. How are we going to get there? Well, I would tell you that the first way we're going to get there is we're going to keep the fundamentals in front of us. And we're going to do that through repetition. So what you're going to hear me say over and over and over today, tomorrow, and Friday, hopefully not to the point where you want me just to shut up and you get it and I'm almost nagging at you, but to the point where it starts to become something more than information, and it starts to become something that you can apply. So we're going to keep hitting the target. We're going to keep hitting this thing. I'm going to keep talking about the fundamentals. I'm going to be talking about, like I did today, why is VPOC of yesterday my target? Why is that? Why am I looking for a long here? Why am I looking for a short here? Low volume areas, what does that tell us? Low volume areas are areas of non-interest, right? Brick walls, slingshots. So what am I looking for in the print? Why am I looking for a long here? Well, it's a low volume area. What is it in the print that I see? I'm going to keep going over those things over and over. We're going to do high repetition. We're going to keep the fundamentals in front of us. I'm going to show you that as I'm trading, how I keep my objectives and the fundamentals in front of me so that I can make sure that I'm trading using these fundamentals. Even if it means I miss a trade or if it means I get out of a trade that eventually works, I'm going to keep my fundamentals and my profit and my risk objectives in front of me at all times. We're also going to start moving away from presentations and into charts. So we may see a few slides tomorrow and Thursday, but in order for us to get there, to move information into knowledge, we need to get into the charts. And that's where a lot of questions are going to start coming. We're going to learn how to read the market for context. Very similar. What we're going to do is what I did this morning, is to say, okay, price came down. I've got this long-term low volume area sitting here, but the overnight VPOC is sitting here as well. In my experience, it means hands off, but it means one of two things. Price is going to move pretty quickly with price volatility. And that may mean price is going to move in a specific direction really hard and really fast, or may mean that price is going to move high, low, high, low, high, low. Once we started seeing that certain levels like opening, swing high, holding, it was an opportunity, especially outside of the overnight range of that distribution. It was an opportunity for us to go long, especially when it lined up with that low volume area. But we're going to start talking through the context, and I'm going to talk through why I don't want to trade here, what I'm going to look for before I trade. So we're going to read for context. We're going to read the print for context. We're going to build our story, our market story, and keep that in front of us. So we're going to learn how to read, and then we're going to learn how to plan. So if this is our context, and we're going to use this thing called if-then. If-then helps to keep you objective. You read, you get context. My context this morning is that buyers are aggressive. Some very large participant came in and said, we're not moving lower. So before I even start thinking short, we would need to start revisiting that area and take out that participant. But we're going to use if-then. So one of my statements already is, if price comes back down towards that 1904, 1903 area, and sellers accomplish what they could not accomplish in the pre-market, coming through with momentum, and bring it over. If price comes back down here, and price starts coming through this level, and we leave a low volume area somewhere between this 1906.75 and 1903, we leave a low volume area in the print, then I will look to take a short wherever that low volume area is, and of course I'll manage my trade effectively. But that is my short scenario. So another scenario this morning that I would have, just based on the print, is overnight held up here at 18. I have a long-term low volume area at 17, which is right here. In fact, I'm going to do this. One of my trades setups, if-then statements to start the day would have been, I'm looking for short here in the 17 area, and if the print confirms it, then that's my short area. Print confirms it, that's my short area, and I will look to take that lower and take that short. So what I will continue to do throughout the day, and what we're going to learn to do, is based on what we read, right? We're going to learn to read. Based on what we read, in the context of what we're reading, we're going to build if-then statements. We're going to build if-then statements, which will become our trade plan prior to the day beginning, and we're going to build if-then statements along the way as the market is developing. Because the story in the RTH session may be completely different than it is in the overnight session. So we're going to read for context. We're going to learn how to plan both pre-market for the day based on context from yesterday and longer term information. And then we're going to learn how to use this if-then. Because what the if-then is going to allow you to do is to say, if this happens, then this is going to be my trade, and this is what this is how I'm going to manage it. This is where my stop's going to be. This is what I'm going to manage it to. That's going to give you control. That's going to give you patience to wait for that if-then. The other thing it's going to do, it's going to help you take away bias. So even though the market is strong to the upside today, and buyers are having much more success at moving price than sellers, or let me put it this way, the activity at the offer is having more impact on price than activity at the bid. So if If that changes, then I will look at a short. And the conditions of that changing are, first of all, price has to come through this level. And I want to see price come through this level, this low volume area, with momentum and a significant amount of volume. Then my expectation, I would look for a short and expect to take that back down, have a long-term low volume area at 675. Overnight VPOC was down here. I would look to scale out in front of that and then see where else this trade could go. But I have no short setup now until that happens. And this would have been my first short setup up here at 17. But even then, with that short setup, unless it broke through this 1075, once the print said that it was done at the bottom, I would have just closed the trade. I wouldn't have held it. I wouldn't let it come all the way back up, because my expectation is there's a high probability that it would come back up. So we're going to build if-then statements, because what I want to get you to the point is of using the print. Why that's doing that. Using the print as your truth to drive your trading and your decision making, because the print is truth. And then we're going to learn to trade. So we're going to learn how to, in the next 2 days, 3 days now, read for context, how to plan out ahead of time, and how to dynamically plan for the day, because each day is its own day. Buyers and sellers have their own interests each day. You have to be thinking both short and long and know that price can do both. And if you have a day like today where you have an open drive, price is pushing higher, you have to create a scenario that says, here's my short and potential, and here's how I'm going to manage my short. Then we're going to trade. So the way that this looks is we start with the fundamentals, and we just pour information into you. And then through repetition, we learn how to read, how to plan, and how to take action. So we spent 2 days going through the fundamentals and principles. I'll spend the next 3 days repeating them over and over and over in the context of the auction and a trade. You're also going to practice them. You're going to think through them. And even you will begin to answer the questions as I start asking and start looking for trade opportunities and start trying to gain context of the market. I will be asking you, what is this telling us? What is this telling us? And you will begin to answer the questions. Doesn't matter if you're right or wrong. What I want to see you doing over the next 3 days is thinking through the process. I want to get you to the point where you see volume, you see acceptance. If you see volume through a low volume area, and you see momentum, you see an opportunity for a trade on a pullback to that low volume area. So reading the market for context, remember the 2 questions. What is the market trying to do? How good of a job is it in doing it? We're going to be using structure charts. We're going to be using VCA and momentum analysis, and we're going to be using the volume profile to build the overall context of the market story. And we're going to be identifying tests versus moves. So what that means is the market will test. The market will test up. The market will test down. How do you know the difference between a test and a move? Well, you're expecting it. And the volume profile will confirm a move, a valid move, when it starts to gain acceptance and show you more trading at a certain level. So the market will begin to show you acceptance. Also, we're going to expect certain tests in the morning. Thin volume profile versus acceptance volume. So if price breaks into a new area or price opens up in the morning and we get this really fast move, and this is a good example today, we get this really fast move like we got today, And the volume profile shows, here's another good example of an unfinished auction. Here's where you potentially would look for a long right here around 1750 to 17. You would look for a long in the print. We got a little bit of a low volume area. We got volume building right above it. That's where you'd look for a long opportunity. Looks unfinished to the upside. And here's a little bit of a low volume area, so you'd want your stop below that. But that's what you would begin to manage to. And you couldn't do that until the print said weakness at the offer, strength at the bid, all the way down to this level, 16 quarter. This would be the first opportunity, but it could come down to 16 quarter. And I would be looking for, again, weakness at the bid, strength in the offer, and I would push the buy button. Especially if it came down here, 16 quarter, 16. So I'm going to go through and I'm going to, we're going to talk to the fact, here's a good example. We got a lot of activity at the bid here, but look at the activity at the offer, non-existent. Does this mean sellers are running over buyers? No way. This is what liquidation of inventory looks like. When all this buying turns into selling, this is what the bar looks like. Strength here, weakness here. So now we've got our weakness into strength right at 17 quarter. Would have liked to have seen this a little bit different. There's still some risk that price may come down and revisit this area. But this, there's still some risk that price may come back down here. What I would really rather see is weakness, and this is what causes me to have patience. And this is where I might miss a trade sometimes. I would look at this print and say, this is the level I want, 16.25, 16. And what I want to see, if the print comes back down here and shows weakness at the offer, strength back at the bid, then I'll go long. That scenario hasn't happened yet. And so price started going back up. I look at it, and this is what a lot of people do. I know it because the temptation is so strong for me every single time. The temptation is to chase this trade, to get into this trade long because it stopped right around the area that I'm looking for. That's fine, but my scenario hasn't occurred yet where I'm looking for, I really wanted to see weakness at 1650, 1625 with strength coming back into the bid at 1650. And again, like I said, does it mean that I miss trades? Yes, it means that I miss trades. But it also keeps me from taking a trade really late, and now it's coming against me. 1, 2, 3, 4, 5 ticks against me, 6 ticks against me. I'm getting nervous. I'm getting anxious. I'm losing money. There we go. Long. Now I'm long 1675. I'm not going to do this because I'm going to stop talking if I actually get into a trade. Long 1675. My stop is no further down than 1575, and I'm just managing the trade now. Now the thing I have to note is weakness, weakness, weakness at the offer. And what I need to see in this trade is I need to see strength starting to come back at the bid up at these levels. I have what looks to be an unfinished auction, but remember, look what happened here again. See how this one little volume node popped out and price started turning around? There's some evidence of sellers right there, holding. But I waited. This is the scenario that I wanted. That's my long, and now I'm just managing the trade. I don't want to see price come back down through 16 quarter, 16. Because VPOC is down here, and what is most likely going to happen if we start coming through 16, 1575 is we are going to see price at least tag 15 a quarter. And then I have to look at this and say, man, do I really want to hold a trade from 1675 to 15 quarter, 15 level? Do I really want to do that and give it that much room? No, that would be silly for me to do that. If I start seeing strength coming back down at the bid here, I can just simply get out or put my stop here at 1575 and get back into this trade If in fact it tags VPOC, I get weakness at the bid, strength at the offer, I can get back into the trade. So again, I'm letting the print determine my actions. And what we can see is still continued strength at the bid. So this may continue further down. So that is what we're going to do. That is how we're going to work that. Thin volume, well, I was showing you this. As price came up, look at this thin volume. At a low volume area here of 1075 for the day, that's where we took that initial long. Thin volume, and then we started getting acceptance above here. Started getting acceptance. And what I want to get you to the point is when you start seeing this volume increasing and you start seeing that acceptance, you get much more comfortable in your trade and your long opportunity, and you start holding for your targets. Again, identifying test versus move. If we're looking for a specific test area, so for example, this morning I was looking for at least a test of VPOC, yesterday's VPOC. Could it go higher? Yes, it could. But I was looking for at least a test of VPOC, and we got that test. From that test level, the question then is what happens to price? And at that test, price came all the way back down towards that low volume area where we started the trade back at 1911. So if the move comes back and it leaves really thin volume, let's say this move higher, this test higher, and it comes back quickly and leaves very thin volume and starts building a distribution below, then that is evidence of just a test, and we can start looking at prices lower. So we're going to learn to trade plan. We're going to identify key levels. In the pre-market, we're going to say here are our key levels. As the market develops, similar to what we did at 1075, here's a key level for this market, this developing market. Here's where trade opportunities are. Here's where target opportunities are. We're going to learn the if-then game. What I have found is that the only way I've been able to control my trading, be patient, and actually take the trades when I want to take them, is playing that if-then game. Because what I'm telling myself ahead of time is, this is my scenario for a trade. If this happens, then I will do this. And it could be if this, then I will do this. And this is how I will manage it. This is where my target will be, etc., etc. It will develop patience. It will improve your risk reward. And in my experience, it's the key to objectivity. And we're going to get into trade execution and management, using order flow for trade management and entry confirmation, using composite and developing volume profiles and other key levels for targets, stops, and scales. And it's going to become kind of a circular process for us, where we are constantly reading, planning, and trading. We're always reading. We're always adjusting our if-then statements. Are they still true? Are some of the assumptions we made about the market based on what's being accepted, what's being rejected, still true? That's how you stay consistent reading the market. That's how you go from day to day to day and with continued success. And it's how you identify change in the market. And it's why, I cannot stress this enough, it's why a lot of just pure indicator systems fail people, because you know that there are so many educational systems out there, methods or whatever you might want to call it, that rely on indicators and specific setups, and they're the secrets your broker doesn't want you to know, and they're all kinds of marketing ploys. However, none of those, they're all easy, and people follow after them because they say, all I need is a couple of different indicators and I'm going to be successful. I saw it in the person's webinar. I saw it in their historic examples of how this works. I'm going to be successful. And what I will tell you is, again, the only difference between those who are successful in trading, and the numbers don't lie, and those who are not successful, is that those who are successful are willing to do the things that the others are not willing to do. and that is to take the time to learn how to trade. It means that you need to read, you need to have context, you need to develop your scenarios, and then you need to trade based on those scenarios. If the market does something different and you lose in a trade, then so be it. You take the information and you continue to read. If you lose in a trade, you look at it and say, what does that mean? Does it mean this market is changing context? Does it mean that I read it wrong? Did I miss a low volume area? Did I miss a print reading? What happened that caused that trade to lose? And so you're going to reread to get context so that you can relook at the market and say, okay, I missed this part, and I am now looking to take a long here or short here. And if the market does this, and if the print does this, then this is where my trade is going to be. But what I want you to see in all this is this type of trading is all based on what buyers and sellers are doing. And I go back to the very primary fundamental, which is when you place your trade, the only thing that is going to make your trade win or lose are all the trades that are coming in after you. If you are relying on an indicator to tell you that price is going to go up or down, and for example, in the context of this last trade, I said one of the things that made me nervous about this trade was weakness, weakness. I mean, this combination right here, and we're going to go through this tomorrow and Friday, this combination right here said, beware, get out. Even though it showed unfinished at the top, I saw this little volume nodule that tells me since price isn't moving any higher, this tells me that there are in fact real sellers stepping in at 19.50. So any long has some additional risk. And where might this go? Might come all the way down to VPOC 15.15 quarter. If it comes through VPOC, I got a little bit of a low volume area there. Let me just take a look at something. But we could move all the way back down. Let me just show you. What do I have here? I have a distribution. It's not a perfect bell-shaped curve, but I've got the majority of my volume of the day right through here. I'm getting a distribution. I've got VPOC near the center. There's a potential for price to come all the way back down here or to here. And if it does, that's telling me something. That's telling me these sellers are having impact. And remember I said I would look to get back in right here at VPOC. I still don't like this print, but that's where I'd look to. I'd look for a tag of VPOC and get back in there. So again, everything that I do is about reading the context of the most current sentiment, interest of the buyer, the buyers and sellers, the current buyers and sellers, because I know that if I understand what they're trying to do and where their interests are, then if the print shows me to get in at a certain place and it continues to support that trade, then my target's likely to be a really good target. I'm likely to win in that trade. Either the buyers or the sellers will come back in to support that trade. So everything I do, everything I've learned to do very painfully and through much loss is by learning how to stay objective, and regardless of what I think, regardless of how fast I see the market moving, know that the market can do anything at any given time, and my best way of trying to follow that is to stay true to the print and what the buyers and sellers are doing so that I can identify change and trade with it. But if you look at what happened here, because I have an if-then scenario, right? If I would have got into that trade, I would have gotten stopped on that trade. But what was my expectation after that? My expectation, I said, was if we come through this area, my expectation is we're going to at least come and test and tag 1525 VPOC. And you can see clearly what happened. The fact that right now price is moving away from VPOC, the print would suggest that it may not be done to the downside. So if I were long at VPOC, as soon as I got a print up here that showed weakness at the offer, strength at the bid, I would scale or close that trade. That would be my trigger, because there's still some risk to the downside, and because of this, I automatically start drawing this picture. There's my distribution. We have extension above, we have some below. My short comes in on the other side of this level right there. I mean a longer time frame potential short. If this trade can keep going, this is unfinished, though I might meet resistance up here. So my first scale on this trade, this is getting a little choppy. My first scale is going to be when the print tells me to scale. When the offer gets weak and strength comes back into the bid, I am automatically scaling. So if I were in with 5, when that scenario happened, bada boom, bada bing, I'm scaling. I'm scaling 3 because my expectation now, the potential, it may just keep going up. I've left 2 on, but the potential now is for this to come back to this print and this print. And there's no reason in the world for me not to take that profit. Yeah, I'd love to have this go 10 points. But if my target for the day is $500, I've just made a good portion of my daily target on that trade. Plus what I made on that initial trade at 10.75. I lost a little bit on that trade at 16 quarter. I lost a little bit because I got stopped, but I just made that back. So I'm at least halfway and likely 2/3 on the way to my daily target. That's awesome. And it's 9:48 in the morning, which, by the way, we're going to look at taking a break here soon. So I have a natural level here or thing coming up where we can take a break. And then when I come back from the break, I'll look at the questions and we'll start into the rest of the content for the day. So repetition, repetition, repetition to hit our target. That's why you see this arrow continuing to strike the target over and over and over again. I believe repetition is important. So all of this, I was trying to think of an analogy that people could relate to, and I don't know who fishes and who doesn't, but to me it was a little bit like fishing, all of this, trading. And that is, you take your boat onto the water, right? You're looking for a spot, you've kind of had some experience, you're using some tools to show you where you might want to trade, where fish might be, you're checking the weather, you're checking different charts, depth finders. You're using your tools to kind of get context of the lake and where you might have a good opportunity for fishing. And then in that, you go out and you find your spot. You say, based on my tools, this is where I want to make a trade. And in fishing, you say, this is where I want to fish. So what do? You set your bait. You throw that out there. Typically, it may be a limit order, and you say, come and get it. Come and get it. And all the while, you have no idea what's really happening around that bait. And just like in fishing, you have no idea what is happening. And in trading, where are the buyers, where are the sellers? You can see the print, but you have no idea who's standing on the sidelines. So there's a sense of not knowing. You've done your work. You kind of think things are going to work here. But once you drop that line, you don't really know what you're going to get. You don't know what's going to bite. And if you get a bite, you don't know if it's going to be the fish you're looking for or if it's something small, et cetera, et cetera. You just don't know. So there's a sense of uncertainty there. All the while, you're watching this little indicator and you're watching your print, whatever it is, your trigger that tells you to do something. And when that print or when that trigger says to do something, like the bobber, right, starts giving you signals, time to do something, after you watch your indicator and it gives you your signal, that's when it says it's time, you take your action and you manage that interaction, right? You take action, boom, you're looking to set that hook, and you're managing that interaction with your target. And then you do it again, except maybe you're kind of looking for a new spot. But you keep going through that process of getting context. Is this still the right spot? Should I go to a new spot? Nothing really is happening here. I'm using my tools to find a new spot. Once I have my spot, I'm setting my bait, I'm putting it out there, I'm waiting for the indicator. Once a print or whatever you use to get into a trade tells you to get into a trade, boom, you're into the trade, and now you're managing that trade. And it's a process that we keep going through over and over and over again. So that's what we're going to focus on, is that repetition. Reading, planning, if then, and then executing and taking the trade based on the OFA tools, the print, the order flow, volume cluster analysis, momentum analysis, and the volume profile, and what we know about the volume profile and what it's telling us in its structure, and where price is most likely to go, where we can expect the other side to step in, that type of thing. So this is a good spot for a break. It is 9:52 Central, 10:52 Eastern. So we'll look to come back at 11 o'clock Eastern and continue our mornings. Does that sound good? And then I'll come back to the some of the questions. All right, we will be back at right around 11 o'clock Eastern, 11:02. We'll give people a good 8 to 10 minutes to take a break. I'll see you in a few. I started talking about this yesterday, and actually the first day, which was the way that I trade is by listening to buyers and sellers. And so everything that I've done in my own trading and what this course is based on is learning how to read the context of the buyers and the sellers, because it is the only way that I have found to keep myself objective and not to be like the cowardly lion in trading, and to feel like I have a sense of control over what I'm trying to do. And it honestly is the only way that I have found to have success in consistent success in trading. And so everything that I've done in terms of building an education process around volume profile and the print has been towards getting out the information relative to the fundamentals. And one of the biggest one is you got to listen to buyers and sellers. They are the truth in the market. Your ability to manage your trades, your ability to manage your risk, your ability to manage the profit, it is, in my opinion, my experience, is significantly at risk unless you're using these tools that we're going through here. So any questions about that here? Let's see. In building volume profile analysis composite over a long period of time, seems quite slow beyond 60 days. Is there something I'm doing wrong? You're using a 30-15 probe rotation. No. Yeah, it takes a long time to build. It's looking at the print, and it's not an issue. It does take a little bit of time because there's a lot of data there, and something that DB and I have started to have a conversation about. So the answer is, I believe that there's going to be maybe a faster solution for you. I don't know when that'll be, but it's something that we are certainly talking to. But the one that you're currently using, it'll work, and it's what I'm using. It'll be in the template that I provide today, but it can be a little slower because of all the data that it's using to pull from. Can I indicate when I would ever use a high volume node or high volume area for entry? That was today. I mean, this was one of my scenarios today. Was if price came through this level at 16.25, I would use look to use VPOC as an entry point, because if it bounces off of VPOC, if it comes down any further, I'm just out, because the probability is it's going to come all the way down through value and down to the bottom of this volume profile. But if it holds here, and I get a print that shows it'll hold, then the likelihood is this is going to be a pretty phenomenal trade. So that's a case when I would use a high volume area for a trade opportunity. Or if price had moved, say, 20 points or more on the day, and it had just broken through a low volume area, I don't care if it's trending higher or lower, it broke through a low volume area and was headed towards a significant high volume area. You know, we're up to the 20 plus point range. I would look at that high volume area and I would look for a tag of that high volume area and look to take a trade in the other direction. So after a large move, I would look for a high volume area to provide a basis for trade in the other direction. So I would use previous days. So we're looking at volume profiles. We can do that. I would look at previous days high volume areas, specifically VPOCs, as an opportunity for trade. You can see the first one here, 1525, came all the way back to 1150. So that was a good trade. My next one was today's VPOC to the downside, looking for a long at 1525. And you heard me talk about that as I talked about a potential long at 16 quarter, 1675. There was a low volume area. You can see that that's now since gone. Looking to take the trade as a bounce off of this high volume area, the VPOC. I've talked about weak in one side and strong in the other. What is an LVN? LVN is, some people call it low volume node. I call it a low volume area. LV is low volume node area, kind of means the same thing. Talked about weak in one side, strength in the other. Any comment about big volume in one side, which is a trap? Traps, at least in my experience, traps usually come over time. Traps aren't something, in my experience, that happen in one bar or two bars. Traps develop. So it's usually what I'll see is a fairly decent rotation, fairly decent price distribution rotation, and I'll see selling happening at the top, buying happening at the bottom, and in my experience, it's either one or two things are going to happen. It's either buyers that are kind of collecting shorts for a stop run, or shorts collecting longs for a stop run. In those cases, we're typically going to see an explosion of price and an extension of price, probing into new levels when we have a trap set up, simply because it's not a stop run. One side is looking to gain enough stops to really push price in their direction. So traps aren't something to me that happen in a bar, one bar or two bars on the OFA. It's something that happens over time, and what you're watching for is rotation in an area. You're watching for your nice distribution, bell-shaped curve, and you're seeing buying coming in at the bottom. You're seeing selling coming in at the top. You just need to watch the print and understand that two things you want to be wary of. When price stops rotating through VPOC, and that rotation, the high probability is, let's say price is coming down. It reaches the top of a distribution. It starts coming down, and it tags VPOC, and it can't move any lower. Can't move any lower. You can see pressure at the bid, but it can't move any lower, and starts moving back up towards the low volume area, the top of that rotation. There is a high probability that there's going to be a breakout trade on the other side of it. So as soon as you start seeing that happen, more than likely there's going to be a breakout. Also, if your we're trading and you're noticing at the bottom strength coming back into the bid at any given time. You're at the top, strength coming back into the offer. It's another good sign that there likely is going to be a breakout. Now, in that scenario where price moves from bottom to top and top to bottom, let's say it moves from bottom to top and price moves up and you start seeing strength back into the offer, there may be a stop run at that point. The scenario that I like the best for a breakout as a trap is when buyers and sellers are back and forth, and we see price bounce off of VPOC and move towards the low volume area. Those are the opportunities I really like as a breakout. You see price coming right back down to our current low volume area, 1975. What I want you to pay attention to now is we have a nice finish, a nicer finish to the upside. We've attempted twice to get up there. A nicer finish to the upside. Our print, weak. What I'm looking for now is a potential of this level at 1975 not holding, and for price to come through 1975. Because we do have a finish. The other thing that we have, I want you to pay attention to, and this is, has a lot to do with structure. We have a pretty nice, very quick, small volume distribution here, but we're building out volume pretty strong right here in a very short amount of time. So what this is inherently telling us is that, in fact, we have sellers, we have buyers who have kind of, I don't want to say left the auction, but for right now, they seem to have left the auction. The fact that price really isn't moving higher on all of this additional volume suggests that there are more sellers, more activity at the bid, actually stepping in. And now what I would want to look at is a potential move back down to this level and this 16. Actually, it's 17 quarter. So let me get rid of that. Yeah, right down here. I want to see a potential move back down here. And this is really where I want to see what happens at the print. So this structure in the volume profile with all of this volume building, I mean, look how much time and activity it took to generate this much volume. And this has built a significant amount of volume in a very short time. The only way that that can happen without price continuing to move up is if there's a potential change in sentiment and sellers are holding buyers. It's the only way this volume could build out like this. Because if this were still aggressive buyers and not passive sellers holding the buying, then the price would continue higher. The fact that we have a relative decent finish now to the upside, and then when you look at the print, weakness at the offer, we're getting a strong probe to the downside. We came through 1975, and now looking for this level 17 quarter, 17. I want to see what happens here. If we get a strong bounce off of 17 quarter, then I would tell you the target to the upside is going to be 27.50 and 30. So looking at the print, it starts to confirm for me what I'm seeing in the volume profile. Right, I'm seeing not much movement in terms of price. I'm seeing volume coming into the market, which inherently, this automatically to me means holding. Sellers are holding buyers. All right, if sellers are holding buyers, then I have to ask myself, if that's the case, where do I expect them to take price? First place is right here. 1975, the print suggested that price was still coming. A lot of strength at the bid, price was still coming. Where's the next place? My kind of moment of truth is either here or here. And that is 1775 down to, say, 17.25. Now, we have a scenario here where we might see price ending its move lower. So I keep watching the print. I see weakness, relative weakness at the bid, strength coming back into the offer. We're not quite down to the 17.25 level, but the print right now is supporting along here. Now here's the issue, and this I will tell you that I struggled with personally for a while, and it may be an issue for all of you too, just simply because of your current trading habits or practices. The trade that I really want is down here, 17.50, 17.25. But right now the print is suggesting that this level here at 18, which is also supported in this low volume area, may very well work. But what I have to inherently understand is that we were trending up pretty well. We've got to finish to the upside. Weakness, weakness, weakness. The print is saying I should be looking at a long right now. But my level that I'm looking for this to come back to, my best trade scenario is 17, 17, 50, 17.25. The print is saying weakness here, strength coming back into the bid, go long. But what I know is that if I go long right here at 18.75, there is a potential that I would need to carry that trade even before I knew I was wrong. I would have to carry that trade almost 2 points. And so the print is telling me yes right now, and this is, I understand this is just a moment of time, but my trade plan, my if-then scenario is if price comes back down to 17.50, 17.25, and I get weakness at the bid and strength at the offer, then I will look at a trade. So my developing trade plan, and now we got weakness again down here. I think this may just start to pop now. We're a little closer at 18, and this is where it can get a little bit not touchy, but this is where you have some shorter term volume profile, kind of giving more weight to the longer term area here down at 17.25. So this may have been the better opportunity here at 18. What it does for me at 18 is it only puts this 3 ticks away. So now I'm only looking at maybe a point and a point and a quarter stop instead of a 2-point stop. And from a risk reward standpoint, that makes a whole lot of sense. And in my trading experience, it is worth the wait. It is also worth not getting the profit, because I also know that I can get another trade yet today. So I am a risk manager first. So even though the print initially showed an opportunity up here, 18.50, 18.75, the trade that I wanted based on the auction, and this is a low volume area right here at 17.75, that's a better trade. Also supports this from the high of day yesterday. That's a better trade down here than up here because it's closer to my stop and I can manage my risk a little bit better. So I waited, knowing that I might miss the trade. All right. Am I looking at the finish on the 12.4 chart since it looked like a nice finish on the 6.4? Yeah, I can do this pretty quick here if I want to see the finish to this. It doesn't matter where I draw this. Here's the 6.4 chart. I can see a pretty nice finish up here. I'm looking primarily at the last 3 to 4 bars. It doesn't have to be a complete stair step up. You'll see volume at 2175. But what's interesting about this, and taking only this snapshot of the volume profile, is what do you see if you were in a long and you just took this profile from this breakout here on up? What you see is a low volume area starting at 1950 all the way up through 2050. So since there's a finish up here to the upside, and as price was moving up and down, as part of this profile right now, I can see a low volume area in this, just this activity. If I were to get long here, then this profile, this is why you do different profiles. You want to look at a profile for different time frames. Remember I talked about a swing high and a swing low, so this would make sense. Price would really need to get through 2050 now, 2050, 2075, to give you an opportunity to potentially take this this trade higher today. But this represents a potential, I'm not saying it would be, but this represents a potential area where we might see some issues for buyers. If we're going to see a little bit more here. But it's an area to be watchful of. Again, the print is showing at the bid weakness, weakness, weakness. We had, what we see in this is we had strength back down at the offer here. Good strength, really good volume back down at the offer here. Right there at 1919. So a lot of, call it support, whatever you want, but a lot of buying activity at the offer between 1850, let's even call that up to 19 quarter. So what we would want to see if we were in the long is we would want to see continued strength at the offer at 1950, 1975, and what we don't know, and this is the hard part, what we don't know is if we're going to get that strength, if we're going to get strength at 1950, 1975. And this is what I mean when I say that the print is truth. Right now it doesn't show it. All you have to work with to manage your trade is what you have on the screen. You can't assume anything. You can't project anything. This is your truth, so to speak. So we're in this trade, you're watching, you want to see strength, which we're getting back at 1950. So this is in this trade, and again, I can tell you this is I'm a trader before I'm a trainer, and if I start getting into this trade, and you'll see this tomorrow and Friday, start getting into this trade, I'll talk through it, but I really focus on these numbers, and you may hear what sounds like distraction because I would be distracted. So what you'd want to see in this trade, again, is strength coming back into the offer, which we have. You're good, you're good, you're good. As long as there is weakness at the offer and strength back into the bid, you have to say to yourself, you have to be objective and say, there's additional risk. There's additional risk in this trade until something changes. So that's, we see strength at 20. We want to see strength up through 2050. We want to see strength up through 2050. At that point, we're likely to come and test at least 21 quarter. Why? Because even in this really small distribution, that's still the highest volume point. While it's not the volume point of control, this is where the trade is happening right now. Remember, I default to the most current context because that is what buyers and sellers are actually doing. I default to the most current context. So what I need to see now is I need to see price get through this. And the only way it's going to do it is if there's significantly more activity at the bid. So I'm using this very small intraday volume profile to help me manage this long. And what do I see? Weakness at the top here at the offer. What's the result? Now I'm getting buyers who had some conviction here and here, right? See the conviction in the buying here? Look at now they're stepping aside. So if I'm long down here off of this level, say I'm long 18 quarter or 1850, how am I feeling about this trade? And that's why I tell you that when you get this kind of, you have a scenario where you got a low volume area above you, you got a nice finish to the top, you need to let the print dictate your scales. I got a neutral auction relative to the volume cluster. I can see a little bit of battle going on here, buying, selling, neutral. This market is in a little bit of flux. Once I got this combination, the weak, and this is I think what I said before, is as soon as I get weakness at the offer and strength at the bid, I'm scaling. Because I don't have any evidence right now that this is unfinished to the upside. And the only evidence I have that it could potentially retest that area is if it gets through 2050 and starts showing strength at the offer back at 2075. If that does not happen, then my trade continues to be at risk. Will the trade work? That's just it. I don't know. Nobody knows whether or not the trade will work, which is why I rely on the print to tell me when I need to scale. Now, it's awesome to be able to get into a trade and just hold it and let it run, let it run, let it run, and take 6, 7, 8, 9, 10 points, and you can stand back and feel like, you know, the king of trading, and you know exactly what you're doing, and you read it right, and oh my goodness, aren't you wonderful? But the reality is, this is I get back to your trading objective. You are a risk manager first, and you should be trading to a specific financial objective every day. That could be $400, $200, $500. And when you pay attention to the print and you take your profit when the print says, I'm kind of done here, and you know that there's nothing supporting a potential return up here, plus the fact that now you got to get through 2050, and this says, nope, we're done here right now. That says, take profit, take profit, take profit. And that's the objectivity that you have to have. When you can start having that kind of objectivity, then, so put it in a baseball analogy. I hope this makes some sense. You know, it doesn't matter if you get a home run in an inning, because a home run can be just 1 point. But if you got a bunch of hitters on your team, and you can get hit after hit after hit after hit, you can still score a whole bunch of runs and meet your objective. And a lot of hits will still get you to your objective versus a couple of home runs. And when you're trading to a financial objective every day, then trading objectively like this allows you to take away your pride of trying to get that big run and that big trade and take what the market is giving you, because then you avoid this psychological setup. All right, my trade hits, I'm in 1825. Yeah, it's working, it's working, it's great. I'm looking for price to come back up here. Uh-oh, it's coming back down against me, coming back down against me. Uh-oh. Okay, I'm going to give it a little bit more room to work. Where am I going to let it work to? All right, I don't want to see it under, you know, this low volume area here. Might as well give it back down to VPOC. Here's what I'll tell you is this thing comes back down to VPOC after failing up here. I wouldn't trust that at all. And what you're going to do is psychologically get yourself into a position where you're going to start moving your stop. You're going to take away from any profit that you gained in the morning, and your overall daily objective is going to be crushed. And you're going to likely walk away a very sad trader at the end of the day. And even if this trade at 1825, 1850, you only take, let's say you see this and you get out, you get a bad fill, and you get a point. And then you take the rest, you know, break even here, and you make $100 on that. And even if it takes off back to the upside and you could have made another 200 or 300, so what? there will be another trade, and you're kind of missing the point. The point is to manage your risk using the information that is most important, which is buyers and sellers. And yes, we use the volume cluster analysis, especially on trends and in rotations, and the momentum analysis to help us in our trades. We use those things. However, nothing is more true than the print, especially at a moment in time. So we did come back to where? I still want to see this at 17. Call me old-fashioned, call me stubborn, that's fine. But I want to see something that looks like this at 17 quarter 17. Good strength at the bid, at the offer. Real good weakness at the bid down here. When I look at this print down here, and this may have just been exhaustion to the downside, now I've got a scenario where I would look for a long here at 18.25, and if I started getting any strength back at 18 at the bid, I would be out of the trade. But the thing that I have to look at, remember my story now, is I've got weakness, 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 weakness at the offer. In order to hold on to this trade, if this stays weak and price starts coming back down and I start getting strength at the bid, I'm done. For me to stay into this trade now, I need to see strength at the offer. Strength, and more strength. Let's see. I'm going to answer a few questions here. Question, so I would not consider taking a short until we got below 17 quarter. And that is relative. Yes. I would want to see 17 quarter, and then I would want to see price come back up and fail at 17 quarter. And then I would look for a trade at least to 15 and a quarter, and possibly back down towards 12 and, maybe even down to this low volume area. But I would look for 12, 11.75, that area. So yes, that's one of my conditions for a short. So while, and this looks like it's moving up now, while I can see weakness at the offer here, and it looks like it's finished here. When I go back to my bigger picture, we're still into this upper distribution right here. And what I know is if I get into that trade, and it did touch 17 quarter, that was in my longer term low volume area, and I take that trade and we continue to get strength back in at the offer through these lower volume areas, then if this auction re-engages, let's say I take one off at 1950, we get through 2050, and the auction re-engages to the upside at the offer, back up at 22 to 2250. I'm feeling, we got a little bit of a low volume area here from yesterday, but I'm feeling pretty good about a next scale right in front of this high volume area of this distribution, somewhere around 24, 25, 24 level, and then possibly look to hold a final contract all the way up to the top of yesterday. I would look for it to come up and tag 2750, and again look for the top of yesterday. I would look to take my last contract around 2950. Uh, 1875 is the IB. Top of IB is in fact at 1875. You are correct. Initial balance, that's the first hour of trading. The high of the first hour of trading is 1875. So it could bounce off of VPOC, and here's I just say this from experience. One of my problems I used to have as a trader is the word could. And what I found is as long as I had the word could in my vocabulary as I went to plan trades, I would never be able to take a trade, or I would get out of trades without any good reason. But as long as I had that word in my vocabulary, I had very much difficulty in taking trades, because what I know about the market is that anything could happen. And so when I entertain could, I'm not picking on the word, but the word could, it's more of a mentality. It's part of the psychology of trading. When you entertain the word could, then every scenario starts to play out, and it freezes you and keeps you from making a trade. The reason I'm teaching this method of trading and using the volume profile and using the print is because it's the only real thing that you actually have to use to trade. And so what you have to do is look at the scenario and the context and say, what is the most probable thing that is going to happen? If price gets back above this level over here, what's the most probable thing? Well, given today's context, if it gets above 2075, 2050, 2075, then I fully expect a tag of 21.25. And now we've got the potential to re-engage this auction and move higher. And if that happens, I've got a next target at 24, maybe 23.75, depending on how aggressive I want to be. And then potentially all the way back up here to 29.50, 29.75. So what I needed to do personally is start to, and this helped me with the if-then, start to think of my trading in terms of probabilities. The probability of where this market is going to go, if these things happen, is this. So my risk reward on this trade at 17.25, was probably a couple ticks, maybe 3 ticks, for a potential of 10 points, 11 points on the trade. That's a pretty good risk reward ratio for me. So anything could happen in the market. And I'm just telling you, that's one of the things that I found that just literally froze me in my trading. Is the most current context the last swing? That's a great question. Is the most current context the last swing? The most current context is this, right? And in that, yes, you want to consider, and that's why another reason I drew another volume profile, you want to consider what is the market doing in this context of the swing high, the swing low. From the breakout to the high, back down to the low, what are we looking at here? And here is our low volume area from there, right at 2050. What do we get? We got weakness. We had strength back down into this area. Now what this does for me is I would be out of the trade. Remember, let the print tell you when to get out of the trade or when to scale. This is an area I was looking for potential buyers to fail, sellers to step into based on this low volume area. When I got this strength at the bid, weakness at the offer, that tells me I better scale out of this trade. Let's say I got into that trade down here. Actually, I was looking at 1750, and the reality is with this print, I never would have gotten into the trade. I might have gotten in after it came back down and went weak strong at 1825. Let's say I got to fill at 1850, be conservative. As soon as I got this print, I'd be out. Say I got a bad fill looking at 1975, I'd have taken a little bit more to point. If I went in with 2 contracts, that's another $100. So in a matter of 15 minutes, I've got another $200. I'm now $60 away from my target. And what if I would have lost on one of those trades? Well, then I need to accept that and be patient and wait for my next trade. So here's what I'm looking at in the market now. We have a volume profile that just showed a low volume area. We got a nice finish to the upside. It failed at the low volume area. For me to accept a long now, and this could still work out as a long. So if price comes back down to 17.25, and I see absolute weakness at the bid and strength at the offer, it's been a trade that I've been waiting for, right? If I look at the overall market here, I don't have, on the intraday, I don't have a low volume area right there, but it's a long-term low volume area. It's also the bottom of this low volume area right here from yesterday. It's where sellers started picking up and picking through or pushing through. It's where we had rejection from here as well in the overnight and here, or yesterday. That's where it bounced off of. So the reason I'm picking this level, even though there's not a low volume area there today, is because there's enough evidence here that says my risk reward on this trade is pretty good. I might lose. In fact, when I look at the print and I see this pressure down here, I might lose in the trade if it comes down and it gets weak at the bid and strong at the offer. I don't know what's going to happen. However, what I can tell you is the risk reward potential on this trade is really good, really, really good. What's the probability that it'll work? Well, the actual probability in any trade that you get into is 50-50. If the trade works, however, and price starts moving up, the probability of this trade at least getting to 1925 and giving me profit is pretty good. If it gets through 2050 and 2075, the probability of re-engaging this closed auction up here is pretty good, and I'll be able to see that in the print. So I have means and mechanisms by which to manage this trade long back down here at 17 quarter, 17. And if I start to see any activity back at the bid and the bid starts growing heavy back at 1750, 17 quarter, I can simply choose to get out of the trade, put my stop at a couple of ticks. And if we get a stop run, meaning a lot of strength to the bid, then all of a sudden weakness, and it pops right above 1725 with strength at the offer, I'll just jump in again because my risk reward on this trade is still a potential of 10, 11 points to the upside. So this is my scenario. My setup is this. I want to see this weakness at the bid and strength at the offer. That's one thing that you will consistently see from me, is this is one of my triggers to get into a trade. Strength at the bid, weakness at the offer, at the level that I'm looking to get into. I did not get that, therefore it's very likely that I wouldn't have gotten into that trade. I see occasional instances where the bid goes strong, but the price is not going down. Is that buyers hitting the bid, sellers hitting the bid, sellers hitting the bid? If you see strength at the bid, but price is not going down, and here's a great example of it. This is very clearly buyers that are holding the bid. This was a boatload of limit offers, limit orders at the bid that absorbed all of the sellers' aggressive activity. This was holding the bid right here. A lot of activity, price is not moving. I hope that helps. That out-of-pocket experience feeling. I still love that phrase. If you bat 300 in baseball, you're probably in the Hall of Fame. That's a great great comment. If you bat 300 in baseball over the life of your career, you're probably in the Hall of Fame. What I would tell you is if you bat 350, 400 in trading, meaning you're right 40% of the time, and you've got the right risk reward, which means, again, you are a risk manager. You've got the right risk reward, then you're a winning trader. And getting the right risk reward is knowing where to find your targets. And that's what we're doing, right? We are learning how to find our targets. What's our next target? If this re-engages, where's our target? We're likely to hit at least 2450. If I start seeing volume growing here, we're likely to at least hit 2450. If we come through that, then the next area is looking at a potential of 2775 up through this initial right here. So I'm looking at this swing high right here, 28 level, and then I would look for 2975 to 30. And you can see the volume starting to grow here at 2250. So again, remember, my only short scenario was down through in this case, once it started growing, down through 1725 and a short on a retest. So my if-then scenario would keep me from getting short anywhere up in this area. Because even though and you can see, here's an unfinished auction right now. See that growing? See if I can make this grow for you. Now it quickly finished. I would be looking for this high volume area up here. Becomes a problem. Remember I talked about this low volume area right here at 23.25 from yesterday. You can see it right there. So price is reacting from 23.25. But if the auction engages and comes through that, I would say that nothing is for certain, but it's highly probable that this is going to at least tag 24.50, that high volume area of the day. And then we would look at the print and see what happens at 24.50. And if it starts going through there, I would expect potentially a little rotation around 24.50. It's a high volume area, so I'm expecting some level of rotation, maybe sellers stepping in at 25.50, 25.75, somewhere up in this area, pushing back down, coming back up. I would expect to start to see a new distribution with volume growing around 24.50. And as long as I've got that distribution, that acceptance higher, that starts to tell me that I'm looking for another long, and my target is now back up towards 29.50 and possibly up to yesterday's high. See that low volume area right here from yesterday? 23.25. Doesn't mean price won't go higher. Do I quit at my objective? That's a great question, Gary. I will, if I have a contract left over that I'm looking to run and I'm past my objective, I will let that contract run through my objective, but I won't let it take me down below my objective. But when I'm at my objective, I am looking to be done. I'm looking to be done, and this is my personal training. Everybody's got to make sure they have their own as well. But what I have found is that beyond my objective, I start getting greedy, and I make my objective, not just as a minimum threshold for a standard of living or whatever it may be, but I've done my analysis and know what I need to make. So my objective is my objective. I find that once I start getting past my objective, I can start getting greedy. There's a potential of making a lot more in a market, and if I see a trend, if the market is trending, and it's giving me a trend signature, I may look potentially at adding into a position or looking to extend my objective. But typically what I'm looking for is to be done at my objective, because I know that if I meet my objective most days and I manage my risk on the days that I'm not really getting the market, I'm not seeing it, it's doing something different or acting erratic, I know that overall my business, I'm going to be profitable. I'm going to be one of the 5 to 10% that make it in the business. So let's see. I'm getting our way instead of letting the market tell us what to do. To your previous fishing analogy, we can tell fish where to go. We can only reel our line and go to another spot. That's excellent. Hey, way to take that analogy even further. Right. You can't tell the fish where to go. You can only reel in your line and go to another spot. That's exactly right. And that's perfect. You understand what you can control, and you got to get yourself to the position of where you can make objective decisions about what you know you control. When you can do that, you will find your trading success consistent. It's when you feel a lack of control because you're not looking at the print, you're not understanding how to read the context of the market. When you have that lack of control, that's when you start moving your stops. That's where you start guessing at targets. That's where you start, you take a little loss and you get out of the market, and or you get aggressive, or you get revengeful in your trades, is when you don't understand what it is that you control. That's when your psychology is messed up big time. And again, one of the things I found to consistency is this method of trading, using all of these tools. And again, I'll do it over and over again. I'll give OFA props and plugs, but I have not come across a better tool to show me the auction, and that's why I use it. Biggest issue to overcome from being rewarded for doing the wrong thing. My biggest issue to overcome came from being rewarded for doing the wrong thing. Okay, why 17 a quarter? What's the magic number? Why is that? I will show you. It's a great, great question. See this low volume area right here? See where it is? That's why. Now remember, once price gets above that level with any kind of strength, remember all a low volume area is an unfair high and an unfair low. The day confirmed a little bit of a low volume area, but once price gets above that level with any kind of strength, this now becomes, I'm looking at it as an unfair low. And even though it dropped down below, my first expectation on a move down from this level was what? A test of VPOC. Bounced off VPOC, a bounce off VPOC, back up, what have I told you before? Puts this level at risk, right? Puts this low volume area at risk, because this is saying that sellers don't believe this is fair price. If sellers don't believe this is fair price, what are they going to do? They're going to find another area that they believe that they can make money in, because what's the basic principle? People get into trades to make money. If they don't believe that they can make money here, they're going to find another level where they believe they can make money. Where's that next level? It was here, right? Here, where we had some stop and pullback. And once it got through, where's the next level? Here. This low volume area from yesterday, which is what we had right here. Where's the next level after that? In terms of sellers, I would tell you the next level is going to be up here at 29.50, 29 quarter level. So sellers are likely to relent all the way back up to this level. And what I'll be looking for in the print is actual verification of that. So as price is moving higher, even if we start moving lower, what I'd expect to see in the print on a pullback is weakness in the buyers, some strength at the bid, weakness in the buyers, but I would expect to see all the pullbacks above this level. All the pullbacks will show weakness in buying, meaning that buyers are stepping away more so than sellers are, and they're basically doing that to liquidate inventory and take profit, more so than sellers are stepping in to push price the other direction. There's a difference. So that's why 17.25, but as price came through and we looked at the print, I talked about an entry here with a stop and then another entry right here at 15.25. I think I was pretty clear about that. Would I look to go long from 2050 provided the print showed strength at the offer and the weakness at the bid? 2050, oh, right here? Yes, yes. Now just remember, we've got to finish to the auction. I would need to look and see what the print looks like. Oh yeah, with this, as this left open, this was absolutely a trade. This kind of print right here tells you the price is coming back there. At the very least, price is coming back to tag 22.50. You see strength here and this kind of number at the offer. It's not done auctioning up at that point. And now we're getting weakness at the offer, strength at the bid. Again, I start looking below. I'm still seeing good support. Look at right here on a pullback. Remember what I told you about a pullback? We'd expect to see weakness in the offer, a little bit of weakness there. We're still seeing strength at the bid, so I would still feeling pretty good about the trade and the potential for higher, potentially higher prices. However, the print is telling me buyers, at least right now, are done at 22.50. So I go back to my profile and say, well, if buyers are done at 22.50, that's fine. There's 22.50. Where might they re-engage? Well, they might re-engage here at 20.75, possibly down to 20.50, and 19.75, or back in front of this low volume area at 18.50. So then I start making a decision about, okay, if I got out of this trade, I'm looking for, or I got out of this trade, I'm looking for another long. What are the scenarios? What's my if-then scenario that would create another long for me? And that's right here. Like you just talked about, 2050, 2075, with the print confirming, which it did right here for another long. As soon as the print, this is done up here, the auction shows finished, so it's done up here. Again, that's all you have is this truth. Might it go higher? Yep, absolutely might go higher. Do you know if it's going to go higher? Nope, you don't know if it's going to go higher. So again, you keep taking your singles, leave in the sports vernacular there, leave some contracts to continue to run, and you manage your risk. And again, at the end of the day, your goal is to hit your objective. You do that, and you're going to be in good shape. Let's see. So that's my macro profile. Yes, the 17 quarter is on my longer term time frame. Yep. Are there sellers at 29? What I'm looking at 29, and honestly, these questions, I knew that these were going to start to come once I got into the charts. This is what happens every single time, and this is perfect because as you ask your questions and I get your questions answered, and I repeat, this is the thing that's going to start helping you transform that information into knowledge. So what I'm looking at yesterday's auction is this. See that little bump in volume right there from yesterday's auction? A little bump in volume and followed by a little bit lower volume area, 29.50. I'm looking right in front of that here at 29 quarter 29. I'm looking for potential of sellers stepping in here at 29.25, possibly 29. So that's where I'd be I'm trying to scale out ahead of this, so that's where I'd be looking for potentially another scale if the auction re-engaged, and outside of this low volume area, if it re-engages, again, I can't guarantee this, but there's a high probability we're going to hit 24.50. And then beyond that, further up, you got to just watch out for this 27 area, but actually more like 28.50, since this was the reason I'm looking at that low volume area as opposed to this one right here. Let me expand this a little bit more. Trying to make this bigger. We got a little bit of low volume area here yesterday at 27.25 and 28.50. The reason I'm looking at 28.50 more so than this one is just because at 27.25, it didn't appear to be an unfair high or low. Price came through it pretty significantly. This level, at least initially yesterday, acted as an unfair high. So there's potential that it will do so again today. And then you can see the responsive selling up here. So we know we have, at least yesterday, we have buyers or sellers that engaged, actively initiated trade up in this area. And this was the first place that they initiated trade. So might they do it today? Yes, they might do that today. That's the first place that I would look. Second place would be this 29. Because remember, I don't know today what's going to happen in here. I'm building my if-then scenarios based on what yesterday these buyers and sellers said that they had interest in. And that's all I have to work with. And so what I look for is, here are opportunities. This is what they did. This is my most current context of buyers and sellers. So I'm using this as kind of a guide. And then I take my trades accordingly. And then I manage those trades in the print, and I let this be my most current context. And now, you know, the other thing that we can do is take a look now on this move where volume is coming in. And we can see, you know, if I move this back a little bit, can see certainly a little bit of trend. This would support. This is how we start using our volume clusters, right, to support our trade. All of this is supporting a move higher, a breakthrough through this level and potentially higher. What I would need to see now to negate that is a selling cluster pretty much on the other side of this with a failed auction at the offer at the top of this. Does that make sense? Question, how do you identify legitimate continuous move? Is this the finish to the bell curve being not nice? I'm not quite sure I understand that question. And a legitimate continuous move is I'm looking for a pullback to an area that makes sense to me. 25 made sense to me. This clearly, price was being held. When price came back down and I got this scenario, this is when I most likely would have gone long, is when I had this scenario looking at this as holding. If price would have started coming down through strength at the bid again, 17.75, I would have canceled my trade and looked to get back in at 17 quarter long. But the question of how do you identify legitimate continuous move, what I'm looking for, and so, great question, what I would do is I've got this volume profile going from down here, and I've included this swing high, swing low, swing high. So I've got really good data in this volume profile. And I can see 2050 as a low volume area. We bounced off of that. It's supported by this trend line. Everything is telling me that this auction, I can see it now, see it unfinished here. We're about to see more volume here at 23. Make sure we're getting, this is starting to re-engage, this auction up here. And so everything in this trade would have told me to continue to hold this trade. The only thing that would have said to get out of this trade now is to see a selling volume cluster and price start to move, you know, a selling volume cluster below this this trend line. And so this is how we start pulling the other pieces of OFA, which give us specific detailed information about the current auction. This is the most current context relative to a trade, and this is how we manage to profit and we manage our risk. And again, I fully expect this to start to re-engage, and the next level is 2450. So is some of this starting to make sense? I know that it's still a lot of information, but by going through some of this, can you see how I can identify? I can identify levels for trade before the market begins. I can identify scenarios, right? If price starts going up, I can do this. If price starts going down, I can do this. And this is the evidence that I'm going to have that shows me price is going up or buyers are having influence on this market. As long as buyers are having influence on the market, then I'm looking for this, and I'm looking for a pullback, and I'm looking to get long as long as the print tells me to. And as long as the print and the volume profile and the other tools like the volume cluster and momentum continue to support my trade, then I can continue to take that trade into profit and towards my target. The scenario is playing out. As long as the scenario keeps playing out, I'm good with the trade, I'm good with the profit, and I don't need to be worried, I don't need to be concerned, especially if I've started to take profit already out of my trade and I'm in a position of I can't lose in the trade. And Ben, the whole purpose of today, like I said in the presentation, my goal is to move from information into knowledge. The only way of doing that is through repetition and for me to continue to repeat the guiding principles, the fundamentals, the elements of the volume profile, and to show you scenarios. Talk through the auction. Okay, this happened. If this happens, what are we looking for? Can we see that confirmed in the print? Not yet. What's the print telling us? Well, it's telling us it's finished to the upside. Okay, if it's finished to the upside, and the scenario is we have buyers who are more effective than sellers, then we would look for a long on a pullback. Where's the most natural place to look for a long? Here's our next. So if price comes back down to this level and we get this scenario that plays out, we're going long, right? So the whole goal over the next 3 days is to take that information now and show you how the scenarios are created, and to go through how to think through and how to use this information, the information that is readily available through the print and through OFA, to make objective decisions. And when you get to that point, I'm telling you, the level of control that you will feel in your trading will increase dramatically. Doesn't mean you're always going to win, but when you lose, you're going to be going back to that level, and you're going to be saying, why did this happen? What's the scenario? What is my next trade? What am I looking for? If this, then that. Does that make sense? So you're looking at the print for a legitimate continuous move. Yes, not much at the volume profile, or both. So what I'm looking for in the volume profile for evidence of a continual move is I'm looking for something other than this finish. Right now I got volume here at 23. These last 3 bars show me a little bit of a tailing off. The fact that this 23 is larger than 22.75, that tells me to a certain extent that sellers are still holding a little bit up here. So I need to see that change in the volume profile. And then relative to the other tools, I can see that this is going to come down a little bit more. Weakness up here. If price starts moving down, I got a neutral auction now. If I were to get a selling cluster, and this is developing, so it's not done yet. If this bar closes and I get a neutral auction or a selling cluster and price starts coming down, I'm just going to look to close that trade. The reality is I could see price come back all the way down to 20.75. And if it comes back down to 20.75, I can just get in if the print, or 20. I can just get back in if the print tells me to. But why give up that profit if I don't need to? So that's the whole goal of the next 2 days, is to keep going through these scenarios. I want to generate questions. I want you to ask me, why would you do that? What are you looking at? I want to make sure that I'm explaining, this is why I would do this. This is how I'm using these tools. And as I do that, we're going to go over and over and over and over and over again, these things. It will start transforming, and then through your homework, it'll start transforming your information into workable knowledge. How do I handle news releases? We're going to go through a whole workflow tomorrow. Do I wait a few minutes after significant releases before you take a position? There are often times when news comes out before the open. So I have a whole workflow that I use, and I'm going to show you the workflow tomorrow for news. Am I correct in noticing I don't need the OFA exhaustion indicator? I don't necessarily use the OFA exhaustion indicator. If I'm scalping, I definitely want the OFA exhaustion indicator, and I've got a couple that help me to scalp. And when the exhaustion indicator occurs with the right print setup, then I can effectively scalp using the OFA exhaustion indicator. For what we're trying to do here and look at overall context of a market and use the basic order flow and the supporting combination of volume, cluster, and momentum, I did not feel that was, I felt that, especially with the exhaustion bars I have, that it may give us some false signals. And in learning this, it has a tendency to, because it's defined by me, not by the market, it has a tendency to distract from the pure auction. And that's why I don't have it here. Hope that makes sense. Buying cluster versus selling cluster, it's just a term, but this is a neutral. What it means is that in this bar, this cluster, these three prices right here had the most volume for this bar, and the overall impact or effect of the auction was neutral relative to activity at the bid and activity at the offer. The overall result, here's where the most volume came in this bar. The overall result was mostly at the offer, which you may consider buying. Here, we got to wait for this next bar to start because this is still developing until we get, looks like we might get one here pretty quick. The overall result was activity at the bid, which is why I would look to close that trade. I hope that helps. By the way, my question seems to have just set up right now at 1923. Oh, relative to, yes, okay. So relative to the continuation of a move. Hang on a second. Yeah, the one thing I would tell you is what I would really be looking for to hold this trade is I would have been looking for volume to start building at 23, 25, 23.50, and for this not to look so finished. When this starts to look finished and I get a print, weak at the offer, strength at the bid, I have to take that for what it tells me, and I have to say the auction very well could be ending right here. I can't, even though it looks like it was re-engaging, it told me that it ended pretty quickly. So I have to respect that. That's what I mean by trading objectively. If you take what the auction gives you as face value, as truth, you will be able to manage your trades very effectively, both into profit and for risk. I'm not really going to appreciate the question about the exhaustion indicator. I'm not really going to, maybe I can do a video on that, but I'm not really going to go through that here because it's really not part of the course in terms of setting the exhaustion indicator for scalping. I can show you how I would use this, the volume profile. Like you can see the volume profile finishing up here. You get strength to the bid and weakness at the offer. That's a clear scalping opportunity. And you can see it's working pretty well right now. But not necessarily the exhaustion. Can I show my VCA settings? Three. Responsive spread is 3, initiating spread is 5, color custom code. I show secondary levels. I don't show additional levels or period classification. And you'll get this template today, so you'll have that. Yep. Yeah, another course on scalping that could be beneficial, but you can use this to scalp too. All right, we have exceeded 3 hours. Is that right already? Oh my goodness. So I wanted to go through reviewing volume profiles. We talked about overnight volume profile, advantage of a session-specific volume profile. I showed you this morning by looking at, and I talked about it yesterday. I'm very interested in the morning. I look at my overnight 1-minute chart to see where volume is coming in, significant volume spikes. That volume spike showed me about 5:30 a.m. Central Time this morning that there was a strong contingent of buyers that stepped into the market. And even when price checked back down towards that level, they stepped back in. The fact that we were getting VPOC near a long-term low volume area told me that we were likely to get a lot of volatility at the open, and that could mean one of two things: price moving strong in one direction or moving very erratically up and down. But it was going to likely going to move hard and fast, either one of those scenarios. So I think I've showed you, and you'll get the templates for the different charts to build volume profiles for each of the session templates. We talked about building if-then scenarios. Tomorrow we're going to start actually looking at using a document to document our levels to build a daily trading plan. Talked about marking the opening swing. Tomorrow morning I'll go through the closing swing from today. And then Thursday and Friday we're going to get into executing the trade plan and if and when we need to deviate from a trade plan. So we're going to set a trade plan for the day. It's going to be if price goes higher than this, and this is where I'll look for a short as a test or a long on a pullback. If price goes down for the day, this is what I'm looking for price to do. Here are my areas of execution. If price goes down and these scenarios happen, then this is what I'm going to do. And once we have that trade plan set, then how to start reading the day to say, is this supporting this trade plan? Is this supporting this trade plan? Yes, yes, yes. For example, if we're looking for price to test higher and we're looking for short, then what we're looking for in the developing day is I don't want to see a really good profile distribution. I don't want to see an open drive to the upside. If we get an open drive to the upside, I want the volume profile to be really thin, and I want price to move really fast up to the level that I'm looking for test to for a short. And then I want to see the print happen. The volume profile will then support a potential great short. So what I'm looking at in the day time frame is what's going on in the market between buyers and sellers right now today supporting the trade plan that I created based on information from the previous activity of the buyers and sellers. Which data feed? I use the IQ feed. And then, of course, I have broker feed as well, which is CQG. So that's what we're going to do. I'm not sure if DB had to step out. If you're still here, I will, after I'm done here, and I think we're going to close up here, I've got in a very silly way, tore a muscle in my leg, and it's causing me some significant issues, and I need to see an orthopedic this afternoon, so I need to get going to that appointment. My calf looks like a bowling ball. Anyway, again, I will get the templates as well as, let me just show you the homework. You're going to get the you are going to get the homework assignment for tonight, and he'll post that where he posted the test from yesterday as well. And then tomorrow you're going to get this document, and we're going to actually start working through what data to pull, what data to use to start building an actual trade plan. So we're going to use this document. I can make it a Word document, doesn't matter. The important thing is that you get the information. How we take this information, do a volume profile analysis, and then create a trading plan. All right. So after I'm done here, I will get those to DB, and he'll get that out with the recording. You can use IQ Feed Client with your Kinetic login as well. Oh, good to know. DB, if you're there, do you have any things you want to end with? All right. I will go ahead and end this. We're a little over 3 hours for the day. Tomorrow we're going to start in the morning by developing a trade plan. We're going to do assessment of the overnight, and we're going to start building a trade plan for tomorrow. And then we're going to wait for the open. We're going to mark our open, and we're going to start looking at building scenarios as the day develops. Thank you, Peter. Good, good. Again, I know it's a lot of information, but my goal over the next 2 days is to keep showing you how to build these scenarios and execute. Can't tell you every trade's going to win, but I'm going to show you how to manage that and manage your risk successfully. Good. All right. Thank you all for sticking with me, asking the questions, and I look forward to tomorrow.